It's Wednesday and we're ready to do another Keeping It Real. Hi, Kerri. How are you doing today?
I'm doing great. Just had a great European vacation. Got to visit one of my sons, so it's a great week.
See, and I'm in Nebraska this week because I'm visiting my mom, and my birthday was yesterday. And so all my kids were back home. And so it's just like, oh, I'm missing my kids.
I bet.
But
Yeah.
but on the plus
Happy
side, it
belated
is
birthday.
80 degrees here. Thank you. It is 80 degrees here today, so I'm not complaining.
And see, we're in the mid 60s here and the sun's shining, so it's a good day.
I've heard it's beautiful. Yes. So we're going to talk today about, what are we talking about?
Being self-employed and purchasing a home. It's a little bit
Yes,
different.
it is different. And we're going to talk about some of the differences that are like when you go out and you get pre-approved for a loan and stuff like that, and the documentation you need to have, it's a little bit different when you're self-employed. So self-employed, it could be it could be somebody who does like an Uber driver. Is that would be an example of one who, if they were doing that. It could be like a real estate broker like myself. It could be a person who owns a business or owns a shop, or whatever. So there's a
Yeah.
lot of people it affects, and it's done, but it's still possible. That's the beauty of
Absolutely
it.
is. It absolutely is. It's anything that's not a W-2 employee is considered self-employed, where we have to
Okay.
calculate income. So that's the best way to think of it, is if you don't receive a W-2, we're going to look at your income a little bit differently.
All right. Well, let's find out all about it today. So that's what we're going to do. We're going to be learning about how to buy a home as a self-employed buyer.
Yes.
Okay.
So why do you think it's different being self-employed? Well, like you said, we're going to need some more documentation.
Right. And you don't have a W-9. And everybody who just did their taxes, if you have a 1099 or a W-9, and I'm sure there's probably other ones out there, but those are kind of the main different ones, right?
Yes.
So
Yes.
if you're not a W-9, then you know that we're probably talking to you today. So this is the cool part.
Yes. And most likely you have a 1099. And so
Yes.
that's what they call it when you're self-employed. So one of the things with being self-employed is your income can look to be pretty inconsistent because business is not always the same. And there's also different seasons for different jobs. So your income can vary based on the season. So that's why there's a few things that we do in order to do averages versus taking it month by month. Because if we did that, then some months would look way better than others. And here, the bottom line is lenders want stability. We want to see that there's a steady income coming in because the risk is there that the payment won't be made if you don't make any money. So that's ultimately what we're looking for. So
All right.
this is
Talk
a little
about
bit,
numbers.
yeah, got to know those numbers. So if you have any more than 25% ownership in a business, you're considered to be self-employed.
So like if I had a little, like a regular job that I had a W-9, and I did that half the time, and I had another job that was a 1099, since I'm over 25%, I would be considered self-employed. So I'd have to do what you're going to tell me to do, correct?
So if you receive a W-2 from a normal job, and then you're also self-employed on the side, we calculate things. You could still go a traditional method with the W-2. We're just looking to see consistency in your self-employed business. And it has to be that you've been in that self-employed business for 2 years before we can count that income. So that's a little bit different, but it's because you're not
talking about ownership of the company then.
Correct. So say that you had a full-time job like myself. I go to work every day, but I want to make some extra money. So I become an Uber driver to deliver food or to just take people here and there. If I did that, before I can even count that income, I would have to do it for 2 years. So it would just be additional income to use for qualifying because I have my stable job. We're talking about people that the only income stream they have is from a self-employed business where they are 25% or greater owner in that business.
Okay. So in other words, if you had 4 partners and you were one of the 4, you'd be a 25% owner. So that would include you. If you had 5 owners, then it would not include you.
Correct. Well, unless that 5th owner, you are the majority and you have 25% and you divide the rest of the 75% up, it really, you can work it a lot of different ways. You can be the majority owner in a company. So we can't say specifically that if you have 4 people or more, that it's going to be that way. Because if you're the founder of the company, you can say that I want a majority interest in the company. So yeah.
Got it.
Like
Okay.
as you can see, there's lots of layers, different facets to this whole thing.
Yes. Yes. Yeah. That's the beauty of being a business owner, though, is that there are different ways to do things. That's kind of what makes it fun sometimes. So
exactly. Yes. So we're really, like I said, looking for stability. So we're going to want at least 2 years of prior earnings so that we can definitely, you want to do an average. And we just want to make sure that the business is doing well and it's likely to continue in the same way. So you'll be making the same type of money or more. So sometimes there are loans in place, and we are going to go over that can help you if you have been in business for less than a year.
Okay.
So we'll go over that in another slide.
Okay.
So just to tell you ahead of time, you have to get organized, right? What are some of the things as a self-employed borrower that you've had to supply before, Niki, when you go to invest in a property or purchase a home?
Well, I mean, you always have to have a profit and loss because they want to see where you're at as far as what you're coming in and what's going out. So that's going to be a huge one. I know you have to be there 2 years, like you just told me. And you have to have your 1099, and then you need bank statements. I see on there. I didn't know about the bank statements. Well, I'm sure I probably did, but I'm just pretending I don't. But tell me about the bank statements because we haven't really talked about that.
They're going to be looking at deposits and consistency of deposits into your account, because as a business owner, you're going to keep your money separate. You're going to have a personal account. You're going to have a business account. So they're just making sure that the business account is staying in good standing and that the work is consistently coming in and you're getting deposits in there, because they're making sure your payroll is going out. There's lots of different things about it. You could be sole proprietor of a business, meaning you are the only person. So you're the only one who has to get paid. But most companies do have people that are employed by them. So they're looking at all of them. And there's a difference between a 1099 and a K1. A K1 is more of a corporation. So that's also something that may be required. But we're definitely looking at a year-to-date profit and loss statement, because we want to see between January and April if your business is trending the way that it was the previous year or two.
Gotcha. Okay. Good to know. So get prepared. Make sure you have all your documentations before you go and talk to Kerri. Got it. Okay.
Yes, for sure. So just like we said, a couple of different types of self-employment, partnerships or LLCs. It's a limited liability company. And so that means that you are basically filing your business taxes, but the business is not paying the taxes. You individually are paying the taxes for your share of the profits and losses of the business. So you could do that on your individual tax returns. You know, there are some people that work for something like Sensi or another one of those at-home companies. That's a good, thing to think about, is that you're part of a company that you're only looking at your portion, your profits and losses. Okay. So do you want to talk about what an S corporation is?
So an S corp, you have a board of directors, if I remember correctly. So you have one person who is kind of like the signer person, right? So that so that's what I know. I know that you can have other things attached to it. You can have different businesses attached to S corps. They can get crazy. So those are like crazy big, and at least I always think they're really big. I'm just a little sole proprietorship.
Yeah, and that's,
I keep it simple and easy.
That's the whole thing, is that your business, they look and they write off all of the business expenses and losses and profits through the federal government. And so the shareholders in the company share in that responsibility. It's not just on one individual person.
Yep.
Or two in a partnership, or, anything like that. So you know more about being a sole proprietor. It's just as an explanation. You're the only one.
I'm responsible for everything.
Yes.
So the main thing is like what's mine is the business is kind of, because it's all kind of one big thing. But I do keep separate businesses, or my business and my personal separated. So I have a profit and loss. I still do that so I can see what's going in and coming out and that kind of stuff. But
Yeah, well, you'll have to account for that at the end of the year. They're going to check
You do.
with you when you do your taxes to make
Yep.
sure that that's all taken care of. But you're
And
the
that was
only
yesterday, by the way. So if you didn't file your taxes on my birthday, shame, shame, shame.
you always remember when tax day is. So another important thing is work with the right people. Okay.
Yep.
I mean, I put our logos up there because we're the ones that are talking to you about this today. So of course we're going to promote ourselves, but both of us real estate agents know what it's like to be their own boss. Some mortgage lenders are 1099 employees. I don't happen to be a 1099. I'm a W-2 employee. So it works both ways. But you want to know that your loan officer knows their business and knows
Yep.
how to work with people that are self-employed and how to calculate that income, because it's not the easiest thing in the world. So
no, but as long as you've got the documentation though, and you are fairly consistent as a business, I mean, or improving, I mean, as long as you're kind of following that pattern and you can have records and show that, I mean, it's kind of the same as a W-2 person. You're just a couple of extra little hoops and stuff, but it's not impossible, and it's not something you should shy away from if you're a business owner.
Yeah, and that's the whole idea behind this, is we want to encourage people to go forward. And sometimes that might mean writing off less. You know, one of the things about, I'm not an accountant, just FYI, I need to give you that full disclosure, but there are certain things that people use as deductions to help it make it lessen their tax burden.
Mm-hmm.
But when you're trying to go and qualify for a home, you want as much income as you can to be counted for qualifying. So just make sure that you work with your accountant and find out what's the best, road for you to go down as far as deductions, so that you're not hitting yourself with a major tax bill at the end of the year, but you're also claiming enough income to qualify to purchase a home.
Yep, absolutely.
So you also will want a real estate agent who understands your needs. So my suggestion is to be pre-underwritten with your income. That means you've sent it into an underwriter and the underwriter has approved it. And so there's no major surprises.
Exactly. Just like if you were buying a house with a W-2. I mean, same thing. Or W-9, sorry, not W. Is it W-2 W-9? I always get those confused.
W-2. Anyway. W-9, I think, is the medical form.
Okay. But when you do a regular one and you're working for somebody else, it's the same thing. Please get pre-approval, because honestly, as a real estate person, we're not supposed to be showing you houses unless you're qualified. So
yes,
this is the key to help you get your offers accepted, to make sure everything goes smoothly, or at least as smooth as it possibly can. This is the most huge part. It works the same thing for your self-employed people.
Yeah, so I was just going to say that it's the same for both types of loans, right? Whether you're self-employed or W-2 employee, this is key. And right there, it's just showing you the reasons why. Strengthens offers, helps set a realistic budget, and it shows the sellers that you're serious, because you've already gone through a process where they know your affordability is for the house that you're looking at, and you are serious about purchasing it because you've already taken the steps to make sure that you are going to be someone where the house won't fall through, because at the last minute something happens and they can't get you approved.
And nothing is worse than going and looking at a house and kind of being approved, or like sort of doing that, and you go and you find your dream home and you go to put an offer on it, and they don't take it because you're not pre-approved, and you lose your dream home because it went to somebody else because they were ready to go. So if you're going to listen, I mean, the other stuff's really important. What you need to know or what documents you need to have to get to that point, working with the lender, and then that pre-approval is going to mean everything, especially in this market, because it's starting to pick up again.
Absolutely, it is, which is great for all of us.
I need to get to work.
So the next thing, we want you to consider that there are other alternative loan options rather than just getting a loan through Fannie Mae, Freddie Mac, FHA, VA, or USDA. There are some other ones, and a non-QM means a non-qualified mortgage. So it's not the traditional mortgage product. And so a big thing that people do is bank statement loans. We're looking at your deposits and how much you have in cash in your bank. So instead of using tax returns, they're looking at 12 to 24 months worth of bank statements. So be prepared for the paperwork on those, because that's a lot of statements to provide. They're going to look at personal and business tax returns. and you might have reserve requirements. They're looking to make sure, especially in a business that has ups and downs, that you have enough cash reserves to cover that mortgage payment for about 6 months. So just keep that in mind. And this other one on the right-hand side is something that Fairway personally offers, but most other companies have something similar where they can just do it based on your 1099s versus tax returns. And on some of the programs, they have lower down payment requirements, lower debt to income ratios where you can only have to put 10% down. So, and sometimes they can even look and see if you've only had your business for a year. That is also still a possibility. So don't be discouraged if you've only been in business for 24 months or for a year, sorry, and not the 24 months. You still could potentially get a home. We just want you to come to us and ask the questions and see if it's a possible thing.
Okay, I've got a question for you because I do not know the answer to this.
Okay.
So as a regular employee of a company versus a self-employed person, is your rates going to be higher as a self-employed person?
Everything really depends on the loan product that you used. Every loan product, every loan program sets their own parameters for rates. And just like every company does as well. And there are still things that factor in, like your credit score, your debt to income ratios. So there's a lot to consider. Sometimes on these non-QM loans and the bank statement loans, they do tend to be a little higher in the APR. So that's a good point to make because often they are a little bit higher because it's a higher risk. Just keep that in mind. When anything is more risky, the rate is going to be a little bit higher because the lender is overcompensating for anything that could potentially go wrong with the loan, like non-payment.
Yeah, absolutely. All right. Final tips. What would you say, Kerri?
Keep those finances separate.
Yes.
You want to make sure that you keep your business money in your business account, personal money in your personal account. Don't make any big purchases. And that's with any loan. We don't want you to go buy a new car or furnish the whole house before you close on your loan.
Or rings or expensive vacations. Don't do any of that stuff. Just wait until you're in your house and then take a nice vacation away and go buy that stuff you want to buy.
Right. If you buy a house on the river or the lake, wait to buy the boat until you're in the house.
Yes, right.
And always be transparent with your lender. If something changes, let us know up front. Let your real estate agent know up front. Often there are solutions to the problems. And if you're afraid to ask the question, don't be. Just ask. And sometimes the worst scenario could potentially happen, but you never know. And you wind up stressing yourself out over sometimes nothing. So just be transparent. Keep us up to date on what's happening. And we'll just help you navigate the whole process. It's just that easy.
Absolutely. All right. So if you want to get hold of Kerri, she's at Fairway. Her phone number and information is right there. If you want to reach out to me, I would love to help you buy a house. And let's go. It's a we have another week next week. Kerri, do we decide what we're talking about next week? We're talking a little bit earlier.
On a solid, we talked about maybe doing a DSCR loan, which is also another alternative loan product. So it's a good one for investment properties.
I think we talk about that one next week because that also has to do a lot with your self-employed person as well. So I think that might be a good one to jump on to next week, and very similar, but a couple of little differences there. But we can talk about this. Sure. All right, you guys. Thank you so much for joining us today. We will see you next time, next week, same time, same place. Have a great day.